we are talking about a stock which you've liked, owned, discussed and debated. That is Reliance. Why is the stock going down? Why is Reliance below its 200 DMA? It is India's biggest company. And if India growth story is so strong, why is Reliance down?
Yeah, Nikunj, good morning. It's a concern actually. You are absolutely right. The fundamentals of the business in each of the verticals, they are remaining absolutely strong and convincing. For example, Geo Platform is already 1,20,000 annualized EBITDA, annualized revenue and 60,000 crore EBITDA company already. And they are growing at a steady pace of growth of about 20%. The retail segment, I think, similarly close to about 3 lakh crore top line, and I think somewhere around 25,000 crore plus kind of a EBITDA. I think the companies have actually, I think, been growing steadily, and the business focus remains absolutely strong and convincing for them. While to chemical business, though they had a rough weather in the last quarter, I believe that I think that is also getting sorted out with the stability returning back in the various refinery products. And of course, I think the exploration business continues to do well. So all in all, put together, all the portfolios of the company, they remain relatively strong. Couple of reasons which one could possibly attribute. One, of course, I think some of the large foreign institutional investors have parted stake in Reliance, and that's the reason for which I think you are seeing a significantly large amount of pressure in the marketplace. I believe most of it, I think, has been over now. The selling part is over. So hopefully things should stabilize from here on. And second thing is uncertainty pertaining to when they are going to unlock the valuations, particularly to the retail-focused business of Geo Platform as well as Reliance Retail. This uncertainty is basically, I think, keeping the institutional investor a little uncomfortable that in one company, all businesses are being currently carried on and the true value is not getting reflected. Could be the reason for which I think the large investor has possibly parted with Reliance, I think, the significant amount of stake that they were holding in the company.
Large cap stock apart from Reliance Deven, which you would say is now a value stock.
So I guess I think the many companies, they are offering new opportunities in large caps. In my viewpoint, I think some of the strong fundamentals remain with likes of Bajaj Finance, Bajaj Finserv. I think the verticals are equally doing extremely well, including the insurance vertical for Bajaj Finserv. We believe that I think that's a good story. Ultimately, I think the growth rate is continuing and the value proposition is built. In current market price, the corrections, they offer you opportunity of 20-25% for an upside. So they look relatively more interesting, more convincing. We find a contraband in metals. We believe that I think the metals could possibly show reasonably strong outperformance in 1 year forward. So from a perspective of buying into the portfolio, yes, I think it's a cyclical stock, but the fact remains that the disclosed kind of company or Hindalco for that matter, or even if I think somebody is taking little aggressive bet, it would be Vedanta, because the unfolding of all these companies and resultant outcome thereafter is likely to remain very, very strong. So one could create a portfolio out of some of the large cap companies, particularly in metals, where we relatively remain more confident at this point of time.
All right. Meantime,
went public, everyone said, okay, lelo, lelo, lelo. The same thing happened with Ola. 75 rupee IPO went to 150, now below IPO price. There are a lot of problems with Ola, that's what we understand. And suddenly there are a lot of problems with Honasa. Why are markets getting it so wrong? I mean, the merchant bankers, when they take them public, they look all rosy and greeny. 6-8 months, they have a good time. And then look at what has happened.
So, Nikunj, I think having studied these businesses and probably understood them a little bit more in detail from the very beginning itself, we find that I think businesses are not bad. The fact that I think these businesses are good, actually speaking, but the fact remains that they have the learning curve to clear. For example, Honasa, I guess I think their major challenge came in because of I think the management of the logistic, management of the SKUs in their stores, and management of I think the products that they kept in their stores. I guess I think probably they didn't factor while opening the store. I think some of these aspects as well. Maybe new company, maybe I think they are relatively experimenting a lot of other things, and at the same time discovering that they are not the only ones in the universe, probably, I think, who would get the premium valuations as far as I think the stock price is concerned. So that's where probably I think the disappointment has come. Another aspect, I think, for example, Zomato, a brilliant company, I agree. I think a fantastic consumer tech solving a lot of problems at the consumer end. But look at the valuation at which the company is quoting, more than 2,50,000 crore worth of market capitalization and a 1,500 crore kind of a profit. Even if you assume that for next 3 years the profit doubles every year, still you are paying a significantly large amount of premium for buying this kind of stock, I think, in advance. I think that is where the reality is checking in. Probably the investors want to see the sustainability of the business model. And that is also one of the reasons for which I think the disappointment has come. And last but not the least, I think when the market starts giving correction, the float starts getting withdrawal from, that is, the liquidity starts getting withdrawal from the market. In this kind of a situation, some of the expensive valuations are bound to get corrected. And that's what I think we are observing, that these are getting corrected at this point of time. Maybe good businesses at a right price, one should enter into them at some point of time.
So we could be in for a flat start. Devin, everyone is, in a sense, echoing the same view on banks. They are cheap, they are attractive. Buy them. They are the ones which could lead the rally. Now, the problem with this view, Devin, is that A, it's a consensus view, and B, this view, in a sense, has been there from last 12 months, that banks should do well. Why are banks not doing well?
I think the fundamental issue is that the interest rates, probably, I would think. The RBI is trying to control the inflation through the monetary policy far beyond, I think, I would say, comfort level as far as the time is concerned. Ideally, about a quarter back, the interest rate fall should have started taking place, which has not happened. Though they have been cautious and they have been maintaining the stance, but the fact is that I think the reduction in the rate of interest is required if you want to see the higher amount of growth in the economy continuing. That is on the one side. Second thing, by keeping interest rate at higher price, I think you are also creating the potential NPA into the books, because ultimately the payability of the borrower comes down, I think, as we all know. And that's where I believe the structural problem is. So confidence in the bank is, or the banks, not coming up as much as I think it should have been. In my viewpoint, I think once the rate reduction cycle starts, you should be seeing the higher amount of participation of investors into the banking stocks, and so would be the increase in the stock prices. I think hopefully in the December quarter, the December policy review rather, I think we are likely to see the RBI indicating further rate reduction in current month as well as in subsequent months thereafter.
There are a lot of mini themes which keep on, propping up. So, for example, EV is a mini theme. Solar is the mini theme. Manufacturing, a large theme, but you had mini sectors, mini companies, like, or within the large manufacturing theme, let me rephrase it, you had a mini theme which is called as electronic manufacturing. So let's stay with that, Deven. I'll start with solar. That's the most talked about thing right now. Starting with the premium to Vari, a couple of companies have gone public. What is your view on solar?
See, we remain extremely bullish about the prospects. I think one obvious thing is that I think this particular era, this next 10 years, is going to be an era of, I think, full of energy-related businesses. And the renewable energy-related businesses is, be it solar, be it wind, be it hydrogen, green hydrogen, or even the biogas. We believe that each of these fuel sources are likely to create a significantly large amount of, I think, buzz in the marketplace. At the same time, attract a lot of new money into this space, and I think the new capacities are going to come up by one and everybody. Some of the larger players are going to be dominating this particular space. So we remain extremely bullish about the possibilities. Particularly the power generator business, I think, is remaining absolutely very convincing, particularly in solar, wind, definitely, and hydrogen yet to see, but it will take around 3 to 5 years. We remain confident on that aspect. Now the EPC companies which are there, they are actually the beneficiary of this particular implementation of renewables, and they should be getting the highest amount of business in the course of time. They are actually getting, I think, top line growing and even the EBITDA growing. The bigger challenge to me, Nikunj, at this point of time, there are valuations. Probably every good story is good at a price. I think, and today we are giving them valuations far more in advance, 3 years, 4 years in advance. At the same time, I think we must also remember that I think some of the larger players like Reliance and Adani, they are unfolding their business plan and they have a habit of, I think, disrupting the market. So today, the small and mid-sized companies which are quoting at a high premium in the valuation, we do not know how the businesses are getting unfolded from these two giant groups. If in such situation, if some amount of disruption is taking place, this premium valuation can become a risk, and that is what my concern is. We remain bullish about the EPC prospects, we remain bullish about the power generation prospect, power distribution prospects, but we are not very confident about the premium generation, premium valuation at which I think these companies are quoting currently in the market.
Fair point. Nuresh, if the market has to make a comeback
Today on Life Insurance by UBS, and they're talking about how they believe that life insurance companies have seen growth that's largely been driven by the ULIP segment, and now they're expecting the company's new commission payout structures to minimize the impact of the new guidelines. So they're talking about the entire sector as a whole, saying the competitive intensity as well is declining. Deven, curious to get in your thoughts?
Again, I think it is time to remain bullish about the prospects of this particular business. Couple of changes which have happened and very important to observe. One, the larger part of the policy premium collected is in the area of term insurance, which is fundamentally good because I think when you link the saving products, I think you are creating significantly large amount of liability franchise along with. Whereas in the term insurance, I think that part is taken care of. So structurally, I think many of the companies have started focusing more on the term insurance portfolio well. Likes of HDFC Life and LIC. Probably, I think LIC has got more of saving products along with at this point of time because of legacy portfolio. But HDFC Life in particular has got a systematic mix of all the in the product verticals. 3 or 4 product verticals, I think, which they are operating. They're systematically creating that part of it. So to a greater extent, I think the risk part is structurally mitigated. And that's what we like more about, I think, that business model. Likes of SBI Life, I think they remain very, very strong on the distribution front, largely because of the bank's franchises that they are enjoying. But in my viewpoint, I think at this point of time, if one company which remains absolutely strong and very convincing in all this is LIC. They have the higher amount of premium book to talk about. They have got a higher valued portfolio to talk about, and the company has got a significantly good roadmap of products available to them. So probably I think one could, and also the distribution reach, of course. So probably one could look at, I think, likes of LIC for that matter for the investment. Of course, Bajaj Finserv is holding the insurance business, life insurance business, and non-life insurance business. At some point of time, if they demerge this business, then probably I think it's a good case to look at as well from the portfolio point of view.
Okay. In this entire so-called Fintech, consumer tech space, which stock still offers value and which is one stock you will not buy irrespective of the price damage?
No, I think the value proposition is not available. To me, I think the companies are fantastic. We've just talked about, I think, companies like Zomato and all. I believe that I think the company's business model is really good. Their consumer tech platform also is, I think, really good. The point out there is the valuation. This market has already discounted the future earnings of at least 2 to 3 years at this juncture. And that's where probably I think the discomfort level is. That any mistake or any kind of fallout, probably I think market will not be kind in continuing with the premium valuation. That's a worry. Otherwise, I think all these companies have really good business model to talk about, and we very closely watch them. Paytm has been trying to correct, I think, whatever the shortcomings in their business model, but somehow or other, I think they're still not giving enough amount of confidence whether I think they would sustain on this path. So one is definitely worth very, very sure to give the valuation that these companies are commanding at this point of time.
All right, Deven, I'm going to let you go on that note. Thanks so much for joining in with your thoughts on the markets. What are the pre-open rates indicate?
If you like this video, then like, share and subscribe to ET Now.